There you go. Okay, so I suppose this is in the category of, and now for something completely different. And thank you very much for your attention this afternoon. As you might be able to tell, I am not an Argentine from my accent. I'm someone who's worked many years in New York. I'm a Canadian by background, and I've come to see this opportunity as really being part of a tremendous situation that is unfolding right now in Argentina. Let me give it to you sort of from a 30,000 foot level. We think Argentina is like Singapore in the 50s, but it has its own Permian Basin. There's a tremendous amount of change going on in the economy generally, and there's a tremendous energy play underway right now in this country that we think we can take advantage of and make exceptional risk-adjusted returns. We're looking to raise about $10 million this year. We need about 40 by the end of next year, and we have 4 million committed by the sponsors, who I will tell you about in a few minutes. We're going to buy energy assets and build an energy platform from principally conventional oil and gas for the time being in Argentina, which is now a reform-led economy. Investment capital can be as little as $100,000 per ticket. The timing is in the next 60 to 90 days. And our team consists of veteran US investors with 25 years in Argentina and an exceptional local oil operator. We're basically looking to buy opportunistic acquisitions of undervalued, high upside oil assets. And we're trying to structure the deals such that we have liquidity in terms of our capital back within about 24 months. In combination, it comes down to deep local knowledge, macro tailwinds, unique access, and that gives us what we would call asymmetric upside. So why Argentina? You've probably all heard about Javier Milei in the newspapers over the last year and a half or so. He has, in the 18 months that he's been in office, created a very pro-business environment. Monthly inflation was 25% a month when he took control of the economy at the end of 2023. It's now down to 1.5% a month and continues to drop measurably every month. The peso has stabilized, the FX rates have unified, capital controls have been significantly eased, and the black market dollar business is basically gone. As you might expect, the country risk score that JP Morgan keeps track of has dropped very, very sharply from about 2,500 down to under 600, and sovereign bonds have basically doubled. And we have a very good underlying fundamental economy visible for the first time in years, where we're talking about 5% GDP growth this year. And despite a lot of hardship to get the economy here, I mean, there have been tremendous cuts to government spending, tremendous. Milei retains a lot of popularity amongst the voter base. And in addition, he's really done things by building consensus with the other political parties that are in power, because his party actually has very few seats in the Congress, and he's had to work together to get that done. So it's been a radical change. And that's unheard of over at least the last generation and perhaps longer. And so it, I think, affirms the logic of why Argentina and why now. Why our energy group, Rexall? So we are building the go-to private markets energy platform for the country. We think we have a multi-year buying window as YPF, which is the government-owned oil company, divests of certain oil concessions, primarily to concentrate themselves on Vaca Muerta, and these investments are available at very interesting pricing. We've created a team to take advantage of that, and that's where our name comes from. Our oil expertise comes from a 35-year-old Argentine oil company called Roche, who've basically been drilling and running oil concessions since 1990 here in Argentina. We're then partnered up together with Explorador, which is a US-based investment manager that's focused on Latin America for 25 years. Andy Cummins, my partner in this venture, I think is in the room, and you could say hello to him if you wish to. My organization, Allegro, which is private markets and deal structuring and capital raising since 2005. And finally, a Argentine family office called Luft Energy, which is highly focused on the oil and gas and renewable sectors in Argentina and originated the transaction to us. We're working together, and Roche is working exclusively with us on this transaction and on all others in the country. And, based on what we've seen, how they have underwritten this deal and brought it to us and talked about other opportunities that are coming, we expect a regular volume of first looks and last looks for deal opportunities as YPF continues to divest. As I said, they're concentrating themselves on the Vaca Muerta formation, which is a shale play, and are selling assets that are very interesting conventional oil assets in other parts of the country. There are also other majors who are doing similar things, and there are assets from them that we expect to be able to pick up. Roche, our partner on the operations side, has really some tremendous relationships in the country, especially with the regional governor of the province where the first field that we're buying is located. The provincial resource agencies, Argentina works a little bit like the Canadian system, where you have a provincial government allocating drilling rights and so forth. And finally, with union leaders, which is a not insignificant factor in this country. We have a first acquisition that we've identified and put under contract. It's in the San Jorge Basin in Santa Cruz province, which is in far southern Argentina, and it pumps about 6,000 barrels of oil a day. And we have additional concessions that we're under discussion with in Mendoza and further south in Tierra del Fuego. That is where this is. You can probably recognize the map of the tip of South America on the far left, and a little box that outlines where the first concessions are. And while I don't expect anybody to actually be able to read this on the screen, we have our 3 concessions identified. And these are our actual facilities in the photographs, not stock pictures that I might have picked out randomly.
Should.
Say again? Sorry, somebody cut in there. What is our business plan for the first acquisition? We think this is a rare opportunity to acquire well-maintained assets that are already operating, around the clock. The 3 concessions are fully connected to existing pipelines. YPF is turning over not only the actual concessions, but significant equipment, vehicles, other infrastructure, and we will pick up a core team from them to manage the properties and extract, from day one at full tilt. In the course of the rest of this year and next year, we expect to be able to do a robust cost-cutting plan to bring OPEX in line with comps that other companies have. And we're about halfway there already, thanks to work that was initiated by YPF as they started into the sale process. You might be aware, as a government-owned company in a country that until recently had a very left-wing populist approach to managing the economy, there was significant room to improve OPEX, in particular staffing levels, as part of this transaction. And then we're going to undertake, some rapidly accretive CapEx, workovers, reactivations, water flooding. It's a very small amount of new drilling, and we're basically trying to emphasize things which are very quick or very cheap and a very strong return on incremental equity. There is a tremendous amount of oil here that is potentially exploitable. The sort of tentative effort to estimate the P1 reserves for our 3 fields alone, this is a little bit tricky because there are numerous concessions in the general area, is around 20 million barrels on the low end of the estimated range. And we have a ready customer base to buy the product. Basically, downstream refiners need our oil in order to mix in with the light crude to produce petroleum products. As I said at the top of the presentation, we're looking to raise $40 million over the next couple of years, maybe as long as 36 months, and 10 million of that this year. We're putting up a collective $4 million and another 15 in assets. And the financial investors, so Allegro, Explorador, and Luft, have a blocking position on the board. And we've structured an initial transaction, which we think has a lot of good downside protections. We're looking for an ability to sort of see how the project is going by investing first in a convertible loan format, and then converting that only if we like what we see. And if we don't like what we see, we have the ability to get out within a 1-year payback period that is secured by the oil revenues that the fields are currently producing. So that we think is very highly secured on the downside. We then have an agreement with our operating partner that if capital is not on track from normal dividends to be paid out by the end of 2027, which is when Javier Milei would face re-election, and conceivably, if you were looking at a real downside scenario, there could be a reversal of some of the governmental reforms that have been made. We have the ability to accelerate the cash flow that goes to the financial investors until we're fully paid out. We think with those two things, in addition finally to a very low debt profile, which is basically just working capital that we will be creating out of a pre-sale arrangement of the first amount of production, we're low levered, highly flexible, capable of executing a cost cutting and capex program on the fly in the next 12 to 18 months. And we look to be closing on the transaction by the end of July, approximately. This is slightly subject to government approvals because it relates to a final negotiation with the provincial resource authority that has awarded the concession to us after it was devolved by YPF to them. I'm wondering if people want to ask some
I had a couple of
questions.
questions at some point.
Go ahead.
Yeah, so how is this structured? There is a concession and you are the owner. What's your relationship to the concession and how much have you invested in it so far?
So the concession are the 3 physical oil fields. And the company that we are capitalizing right now between the 4 groups, the operator and the 3 financial investors, will own those 3 concessions until 2042 when the concession expires. We expect that there's very, very strong useful life of the concession for about another 10 years, and then it will start to diminish. We have not closed, and therefore in a technical sense have not literally invested anything yet, but we have committed to put up, we need $10 million to close. We will have the concession at that point, and we will have 4 of that 10 million coming from the financial investors. And so we're raising the incremental amount now, and then there would be reserves on top of that.
And who owns the company right now, or the fields? That is the Argentinian government owns it, or you own it, or another company owns it?
So all oil concessions in Argentina are technically owned by the province in which they are located. Up until recently, these concessions were run by YPF, who did a negotiated divestiture of them back to the province, and the province has done a transaction to us on a essentially simultaneous basis.
And you're gonna get a 17-year concessionary license, basically.
That's correct.
Right. And are these proven fields?
They are operating 6,000 barrels a day production.
Got it. Perfect. Excellent. And so an investor in your company gets an allocation towards the entire portfolio, not an individual well, correct?
Absolutely. The entire thing. There are there are nearly 1,000 wells. We think that some of them will be closed down because they're already inefficient, but you're owning a company which owns 3 oil concessions and about 800 operating wells.
And who do you sell the oil to? Is that all domestic demand, or does it get exported, or what?
I mean, look, in the short run, it's a domestic demand. Basically, it goes down a pipeline to a downstream refining facility and gets mixed with light oil that comes out of Vaca Muerta and produces domestic petroleum products, priced at the world market price less what Argentina charges as an export tax.
Got it. And what's the situation in Argentina in terms of oil demand? Is that growing?
Very strongly. I mean, the hybrid car is barely here, and I've never seen an electric vehicle on the roads. And, this is a growing economy. You still have large numbers of people who are upwardly mobile, and that, it's a little bit like, it's not an emerging economy is too strong, but there's very substantial demand.
Fantastic. Great. Anything I'm forgetting? We've got about 1 minute.
I mean, I think at the end of the day, we see this as a repeatable transaction. This first deal, these first 3 concessions, is a test kitchen. And we have the ability to, we think, buy quite a few more. And we expect that that will allow us to be a significantly larger company in 2, 3, 4, 5 years' time that is operating around the country and working in hand in glove with, the same partner group and hopefully, numerous outside investors who really have very limited ways otherwise to invest on the private side in the Argentine energy sector. And this is a country that has turned a tremendous corner. I mean, there were really substantial cuts to the budgets here at the governmental levels, staffing cuts, regulatory cuts. I mean, they're literally going through laws on a line-by-line basis with a highlighter, improving how the commercial system in this country works. And that's hardly been done anywhere.
And what about infrastructure to support the projects?
I mean, this is existing facilities that have been run by the largest oil company in the world for decades. I mean, it's fully accessible by pipeline for the downstream delivery of the product, and the roads are fine.
Fantastic, excellent.